Hello, good evening, ladies. Good evening, good afternoon, ladies and gentlemen. Welcome to our next session of the day, and I am very pleased to welcome to the stage Gaurav Kashyap, the trader at Equity Capital. We'll give him a little round of applause. Gaurav is going to speak to us on tracing the Indian rupee opportunity. He's also the director at EGM Futures, and he's going to give us an introduction into INR trading, some insight into INR trader demographics, as well as some knowledge on how to tap into INR liquidity. So let's give him a very warm welcome. Thank you. Okay.
After you. Thank you so much, Rachel. Esteemed speakers, presenters, panelists, partners, organizers, and most especially the visitors and guests. It's amazing to see you all, and welcome back. It's been a very long 18 months. You know, amidst all the presentations I've seen today, a couple of key points resonated with me throughout the day, namely customer link-ups, transparency, honesty, financial responsibility, and client education. And connecting all these themes while perfecting a balanced, impassive strategy is perhaps the most interesting theme for me. Therefore, I really hope that my presentation will live up to these themes, and I also hope to give you a unique insight into a rather niche opportunity which I believe has not been explored deep enough. So without further ado, my name is Gaurav Kashyap, and I represent Equity Group of Companies. And today I'll be speaking to you about the opportunities in the Indian rupee and in extension to that, other Indian asset classes. So a quick overview of the Indian rupee. It was floated against the US dollar in 1947, shortly after World War II. In this period, it appreciated from 3.3 rupees to its current day 74 Indian rupees to the US dollar. It's a partially convertible currency still. The RBI has a very, very strong oversight over the Indian rupee. I think most recently they've upped their limits to transfer money outside of India from 50,000 up to 250,000. And this 250,000 can be deployed towards education, towards health, and most interestingly, towards leveraged financial products, which is why we're all here today. So we've seen a lot of volume growth coming in through obviously the onshore segment from the Indian markets, as well as the offshore growth. Now, just to give you guys a bit of an idea, our industry is not so properly regulated in India. It's similar to the US markets, whereas they protect their exchanges. By protecting their exchanges, they ensure that those exchanges are alive and that business is not cannibalized by more leveraged FX brokers. So that's the current scenario in India. Now, I just want to talk you guys through quickly the total INR in US dollar notional. We start with a period of Jan 2020, and all the way up till August 2021. So as you can see, on average, there's about $100 billion worth of INR traded monthly, and this is only on the offshore segments. I mean exchanges. I don't include NDFs into this figure. These are purely exchange-traded Indian rupee futures. To give you an idea. Now, obviously, you'll see sustained periods of heightened volatility where in March of 2020, right on the onset of COVID, we had about 165 billion traded just on these exchanges, only in the Indian rupee. That's tailed off a bit recently because of the low volatility that we're experiencing, but I'll get into that into a bit more detail. Now, a further breakdown of these numbers show that this offshore Indian rupee volume, where is it dispersed? I don't know if you can see at the bottom, but the largest volumes that we see in the Indian rupee are in the National Stock Exchange of India, so that's considered onshore. That's closely followed by the SGX, the Singapore Commodities Exchange. And in third place, we have the Dubai Gold and Commodities Exchange, which was actually one of the pioneers in launching the Indian rupee for the first time ever outside of India. And of course, at the bottom, we have the Chicago Mercantile Exchange's Indian rupee contract. They basically launched this Indian rupee contract about 4 years ago. Unfortunately, it's not garnered enough traction, and that's largely because of the large Indian populations in Asia as well as the Middle East, who naturally move towards the DGCX or the SGX. but the total of these exchange-traded INRs yield these results. Now, if you ask me, the NDF volumes are probably 30 to 40% in addition to this. So you're talking about an asset class which has relatively good month-on-month liquidity. Now, why are we seeing an interesting increase in Indian rupee trading? This is for many, many reasons. First and foremost, the Indian population to which you would be communicating with is burgeoning. It's a very, very savvy investing population. The middle class is growing very, very quickly. And of course, India as a population has a massive population. I think when I last looked at the stats, out of 1.36 billion people in India, out of this, there's 32 million that are outside of India who are potential clients. Out of this 32 million, the average income for these people is about 150,000 US dollars. So they do have disposable income. So even if you're able to tap into 10% of this population, you're looking at a pool of about 3 million very sophisticated investors. Of course, cross-product arbitrage is another big successful selling point for the Indian rupee. The Indian rupee, because it's traded on all these exchanges and NDFs, it does create a natural arbitrage in the market. You can find these opportunities between the NSE in India as well as Dubai, between NSE and Singapore. Now, on average, if you look at the returns over the last 2 years, and I'm talking purely from a proprietary trading fund, not a client fund, if you were to adopt a cross-product arbitrage strategy, roughly in the last 2 years, you can look at about 1.5–2% annual per month, which works out to an annualized rate of about 20 to 24%. After you remove all your costs and trading fees, that comes down to about 15 to 16%, and that's across the year. So that type of business, that type of flow has really seen a lot of success for the Indian rupee. Now, it's a little bit complicated how to set up because you have one leg in the offshore, which would be in Dubai, for example. You have an option of doing it in Singapore. But setting up that leg of the arbitrage in India is where it gets a little bit tricky because you need to onboard with a broker there. You have to post margin. And of course, when it comes to margin calls, you also need to know how to manage that part of the cash movement. But of course, we're located at booth number 99. If you want to get into more detail, I'd be very, very happy to talk you through how that goes. And of course, volatility. This is by far the most interesting thing for arbitrage traders as well as retail traders. And we're seeing a nice little bump in the last 2 to 3 months. What I've done here is I've taken the 30-day volatility of the USD INR. That's in the blue, the turquoise blue line. I've also taken the cable volatility, which is represented by this white line. And I've taken the euro-dollar volatility, which is the gray line. Now, as you can see, the Indian rupee had a very, very heightened level of volatility. This was in April, at the end of their fiscal year. That's kind of tapered off a bit. And now we're seeing a slight uptick as we enter into the last quarter of 2021. And we've naturally seen an increase in our Indian rupee liquidity that matches this trend. More volatility, more traders come in, and of course, ultimately more volumes for the broker. So we've established that Indian rupee trading for your clients or for you would happen on an exchange. They also happen in NDFs, which I'm not going to speak about too much today. But what's next? What's next for this potentially niche opportunity, which I'm sure no one in this island probably would have even considered or even thought of? This is what I want to open up the discussion to. What I believe is, based on these demographics of this 3 million investor population, I think that the market is probably prime for more participants to tap into this Indian rupee liquidity. I'm sure you all deal with many, many Indian clients who are trading in very many products, CFDs, FX. But I think if brokers were to consider bolting on an additional product line, which is very, very low cost, it's very, very low touch, it could really open a new diaspora of retail client participation. You could use it to cross-sell your other products. So I feel that there's a lot of traction here at a very, very low-cost model. And I say it's low cost because this is the current setup that we've established at at EGM Futures, part of Equity Group. So you have your LP. In this case, we can consider it the exchange. You have your MT5 gateway, and then you have the broker. In this case, let's say it's EGM. With the implementation of another MT5 gateway, if you already have an MT5, you simply plug into our existing gateways, and you can redistribute that price to all your end clients. Now, obviously, if you have an MT5 gateway, it's very, very simple. It's very, very low touch. Even if you don't have an MT5 gateway, through white labeling solutions of MetaQuotes, you are able to introduce this product range to your clients at $3,000 to $4,000 to $5,000 a month. So it's very, very easy. It's very, very low touch, and it can be introduced quite seamlessly. The other thing about the Indian rupee, which makes it more interesting, is that because it's a partially convertible currency, there are no such traditional market makers in this space as yet, which is why a lot of the business, it goes two-way. You get filled on an exchange. This simply means you have no counterparty exposure, you have no risk, you have 100% clearing guarantees, your settlements are also guaranteed. So it's really a very, very easy, it's a very, very easy product to adapt. And not only that, but as I said before, you have a new client demographic. There are a lot of products that are available in this bouquet. Of course, you can trade in Indian rupee futures. You can also trade in single stock futures of products that maybe you guys have not heard of, but are very, very popular amongst your Indian clients, such as Reliance, you have Tata. These companies are all openly tradable, but it's just, you can lead the horse to water, but you can't make him drink. So I think if this is to be considered, it can really bring some good advantages to your existing product lines. Do I have any particular questions so far? No? Okay, guys. Well, I hope this gave you a bit of a teaser into what the opportunities are. Again, I represent Equity Capital. I'm in booth number 99 on the other side in Poda Hall. If you want to discuss further about these types of opportunities, distributing INR to your clients, as well as starting a small fund to trade these arbitrage opportunities, I would be more than happy to talk you guys through the process. Thank you very much, and wish you a good day ahead.